So on that note, let's really dig into today's discussion. As I mentioned, today's broadcast entitled When the Refi Boom Ends, will you have the tools to win the next purchase cycle? And it is led by TMC preferred partner Get Credit Healthy and their CEO, Elizabeth Karlowski. Additionally, leading today's discussion are a pair of Get Credit Healthy client advocates. First, we've got Kevin Peranio, Chief Lending Officer with PRMG, as well as Jason Bressler, Chief Technology Officer with United Wholesale Mortgage. So good afternoon, Elizabeth, Jason, and Kevin. Really appreciate all three of you joining for this afternoon's discussion.
Good afternoon, Tom. Thanks.
Thank you, Tom.
My pleasure. Well, appreciate you guys joining. So on that note, let's go ahead and jump right into the discussion. And I'm going to disappear from your view and turn things over to Elizabeth to kick off today's discussion.
Awesome. Thanks, Tom. Well, I wanted to first and foremost start by saying I am really excited and fortunate to have two industry leaders such as Kevin Peranio and Jason Bressler on the call today. So guys, thank you so much for being on the call. And I'm going to jump into it because there's a lot of questions. And I know Kevin, Jason, we have had numerous conversations about right now the industry is booming. Things are happening. Jason, from a technical perspective, you guys, I know there's so much activity going on, and I'd love to hear some of the things that you guys are doing. And Kevin, I know from an origination perspective, there's just a lot of activity. But the question goes to, what are we going to do when things kind of normalize, when it's not as crazy? And Kevin, I'd love to hear from you. I mean, are you guys starting to think about that? Because right now leads are coming in. It's nonstop craziness, 24/7. But we all know things sooner than later will start to normalize. And what does that mean?
Yeah, I think we're all very blessed to be in this industry and business, and have the favorable interest rate. This could be the most epic refi boom we ever see in our careers. And, I'm not going to say never. I've been in the business almost 20 years, so I know not to use that word. But we had our senior management meeting on Monday, which is the first Monday of every month. And there's four of us that are partners. And one of our two founders, the CEO, Paul Rozo, he kicks off the meeting. And then, I kind of chime in and add some commentary. And then same thing at the end. And I guess the point that I was trying to make, which I think, I'll share with everybody here, is, we're acting as if the refi boom is over. So the refi boom is over. It's dead. Now, of course, rates are still low. There's still plenty of refinances. If there's 12 million borrowers eligible for refinance versus 17 million, obviously there's a lot of refinances out there. But the point we're trying to make to our team is, if you haven't already, or even worse, if you've ignored your purchase money and purchase business growth activity, it's time to really shift your mindset and act as if the spring purchase season is coming, and we have to think about ways, to get it back out there and grind it out in our markets, serving our local communities, and getting first-time home buyer business, and creating a new set of leads and referrals for the rest of our career and that relationship. So, we've basically said, for dramatic effect, the refi boom is over. It's time to move forward. And, there's some macro trends out there that probably tend to that. There's a 50 basis point hit that if it's not on everyone's rate sheet, it's coming soon. Ours isn't quite there yet on the 30-day, but it will be. And that's a big difference. That's a quarter difference in rate. You've got the Fed saying, hey, we're going to let inflation run beyond their 2% target. That's bad for bonds. There will be a president in 4 weeks from yesterday. Maybe it takes a little longer for some ballot counting, but once there's certainty there, the markets tend to run away. I don't see anything that's going to make rates go lower than the absolute historic low we saw in August, and we've been creeping up since then as well. So we're acting as if we're moving already into that grinded out hand-to-hand guerrilla marketing combat for purchase money business.
And I'm glad that you said that, because you're making your loan officers already realize that what if, right? Prepare for the what if. And I want maybe Jason to, if you have some thoughts from a technical perspective. I mean, you coming from United Wholesale, I know your position, you've grown what was it, 150 developers to over 1,000 developers now with UWM because of technology. And obviously, Get Credit Healthy is a technical platform. How do you envision what's happening right now in technology to play a role? Because Kevin, I do want to go back to your comment. Refi boom ends today. What are they going to do, right? And then it's really trying to understand as industry leaders, where are we guiding our team? Is it more technology? Is it more, education? What is that? So Jason, I'd love to hear from you and your thoughts.
Yeah, I mean, so, and thank you. I mean, we at UWM, we built our entire model on basically technology and making sure that, every mortgage loan officer has the technical tools that they're going to need to be able to actually thrive in any market. This, right now is it's almost like 1998, where it didn't matter who you were and what you did. All you had to do was basically open the front door and people are rushing in. And there's a little bit of a give and take for that, I think a little bit, but overall, where we keep seeing, and if you look at trends over the mortgage industry, so I've been in the industry for longer than I probably want to say, but probably 25 years now, and only in IT. And, what we've seen is that the loan officers that don't take the time to embrace technology during the boom are the ones that wind up getting well behind the curve. And it's tough because you got to run in parallel. You still got to take the business in. And, even to Kevin's point, where so many people focus on the refi market because it's so easy. It's so much easier to do a refi than it is a purchase. But if you're not going to both focus on purchase and then focus on the technology platform and the tools that are out there, then at some point what's going to happen is the ones that do are going to be so far ahead of the curve. The ones that aren't, for instance, even on the Get Credit Healthy platform, the ones that aren't taking in, if you can't do all the business right now and you're not using the tools available to you to actually get credit repaired, get that borrower sticky to you, so that when they come back in 6 months, 8 months, 12 months and are ready and eligible to actually be approved and have referrals from that, when this dries up, and it will, it might not be, it won't be this year, and it probably won't be next year, but it will happen. And as a loan officer, if you're not taking the time from a technical standpoint to actually market and build out your CRM and understand the tooling and know where you're going, then at some point it's going to come down and it's going to crash. It won't be today, but it will end up happening.
Kevin, do you have, because you mentioned it even from your first statement, if the refi boom ends today, I love what you said, Jason, the embracing, right? Are you finding your top producers that embrace more of the technology and that's what allows them to thrive? And do you believe that does make a huge difference for from top producers to those that are just average producers, and how it will impact them in the future?
I heard you say Jason's name. I don't know if you wanted Jason to take that.
Oh, I'm sorry. It was Kevin.
Yeah. Well, look, technology is obviously, it's no replacement for the human aspect and the relationship part of the business. It enhances it. It allows you to do more and allows you to be more efficient. It allows you to take less hours to, produce a loan and work through it. I remember a couple years ago having this conversation. We have 1,200 loan officers in our retail channel. We also have a wholesale channel. And I have a lot of respect for UWM, and congratulations, Bressler, on you guys going public. It's a big deal.
Thank you. Appreciate it.
Yeah. So I will say that, when I've only been in executive ownership for about 4.5 years at PRMG, and for the prior, 5.5, I was out east, helping build the teams. And I noticed that there's a difference in the experienced loan officers and how they grab technology versus, the newer one. And there was an interesting stat a couple of years ago. I haven't really followed up on it, but it said that 70% of all the loan officers in our industry that do 100 units or more in a year have been in the industry less than 5 years. Now, if I'm 55 and I'm a loan officer and I'm not doing 100 units, what am I missing? What is it that I'm not getting? What am I not doing? What am I not grabbing onto? And so one of the big projects we did here, for the last couple of years, it's just, showing the tools and helping our loan officers of all ages use a point of sale. And, this is such a simple thing. And I still think that not everyone does it. I mean, push button, get mortgage. Is it that easy? I mean, I think there's better points of sale out there than that. I mean, tons of them. And, I could probably name 10 that I think are better borrower experience. But but in our models, we have to get our originators to use it. So even about a year ago, we're Encompass based. So about 86% of our loan applications a year ago, the loan officer was still on their headset and hand typing in the loan application while talking to the borrower. So it's been part of their routine over 10, 20, 30 years of being an originator. Are you a co-endorser on a note? Do you have any dependents? How old are they? Like they feel that taking the application is building the relationship. And the reality is you can actually have the confidence, send the link to your borrower to fill out as much as they can on their own. Then you review what they get once it's filled out. Then you get on the phone with them. So let's say you want to take the same 30 minutes to take an app. Well, instead of asking all the stupid questions and checking boxes, you already know the answers. Oh, I see you live so-and-so and you got 2 kids. I got 2 kids. Have you thought about schools? Have you thought about, where you want to look? Well, I know that area because I'm local and I understand your market. I'm not some little dude on a headset in Detroit. I can look at this stuff pre-screened that you pre-filled out. So I'm happy to say that, a couple of years later, last month, 45% of all of our loan applications in our retail channel were done on a digital point of sale. And I mean, that's humongous. And another, maybe almost 2,000 loan applications taken in a point of sale. And so, it does take time to use these tools and get adoption and change behavior. But at the end of the day, once you do that, it's there to enhance the relationship of the established, experienced originator in the community. So then you get to win local and win with tech.
You know what, Kevin, you bring up some great points because you're talking about the build relationship. And I know within Get Credit Healthy, we are a platform that connects loan officers to nonprofit entities. And it's all done for efficiency, key performance indicators to drive business, right? But it's that relationship, right? It's even within, as I said, those senior loan officers, how they use the tool to build the relationship with consumers that don't qualify due to credit guidelines, right? They use what's in front of them. And as you said, a click of a button. Well, yeah, that click of a button is now producing so much more in the background. And how do you continue to utilize the tools right in front of you? How do you get those loan officers? And it seems that you're saying it's just continuously practicing, making them aware that it's available right in their application.
Yeah, 100%. I mean, credit restoration or just miss, or even if they qualify and they're, a 655 versus 660, and the rate is something that matters to them and they're still kind of in pre-qual mode. Those tools that you offer, it's integrated right in our system. You press a button, you get to keep tabs on them, help them out. I can say that most call center models don't take the time to help someone when they don't qualify. And that is another win for the local originator. If you're in the community, you get to foster someone and teach financial literacy. I mean, literally our originators are the teachers of financial literacy, helping someone with the single largest purchase they make in their life. And you're helping coach them through that. And sometimes that takes time in helping them, build their credit and get it to a point to where it's better financially for them. And so tools like Get Credit Healthy, which are integrated from a tech standpoint, super easy with, the follow-up and the tickler and your team and the customer service that your team offers. We've had great success with it. So, those are things that only local originators are going to take the time to do. And, Bress, you said, you open the door and the loans come rushing in. I have a friend and colleague that I worked with many years ago. His name's James Etter. And the last time we had a boom like this in, 06, 07, he used to say that, he was spearing loans out of the sky. And that's what we've been doing right now. Literally, it's so easy right now, but it's not going to be as easy. And tools like GCH will help us win.
Well, I know we have mutual friends that have said in the past, gosh, I could be, I might be a $3 billion or $10 billion or whatever $1 billion institution. And what if I just spent a smidge of the same effort at the ones that I couldn't help today, right? And had the ease and had the technology to do it all within our platform, how much more would you actually be able to accomplish in the years to come, right? And that's the truth. It's utilizing it. Hey, Jason, from a technical perspective, what's your feedback on having everything in one ecosystem? I know there's so much tools, there's so much technology out there. People are coming to you, to Kevin, to your team, and saying, "Hey, we could do this. Just use our platform. Just use our platform." I mean, what are some key elements that you always try to focus on, or make sure your team focuses on when dealing with new technology?
Well, I mean, first of all, we want to make sure that no matter what it is, disparate, non-disparate, one ecosystem, several, that from our standpoint, whatever's better for a broker and for a consumer is exactly what we want to make sure that we're doing. If you look at it from a technical standpoint, obviously having everything in a central location makes a lot of sense. So if you're, to Kevin's point, if you're living in Encompass and then you've got a pass-through directly to other, tooling and platforms like Get Credit Healthy, I mean, it obviously makes it a million times easier. The thing is, and the way that we kind of look at it is, we took, even as a chief technology officer, for a long time, and we actually do need to take this approach overall as we get out to the mortgage community, is when I started, I took the approach of, it's the Steve Jobs approach of people don't know what they want, so you just tell them what they want, and then eventually they start using it and they get back to you with, hey, here's a million ways to make this better. Because you almost have to start somewhere, but it's the same thing with technology. If you, again, if you don't know that it's there, you almost have to force people into it. And that's really one of those important things as a business owner, as a broker owner, as wherever you are, at some point you got to stop. And like, I like using this example a lot. 2.5 years ago, we were at UWM, we rolled out something called One-Click AUS, where, and obviously it's completely ubiquitous now, but when we rolled it out, it was so far ahead of the curve where, any loan officer could come into our system, put their preliminary application through, and then we built the system that would run DU and LP simultaneously, and then return the results and say, hey, here's where you should take this if you want to close the fastest with the least amount of conditions. And we rolled it out, and nobody used it. Because nobody knew what it was, and we didn't do enough of the right training on it. So we forced people to use it. We said, hey, you actually can't submit to our system anymore unless you use One-Click AUS. And it cost us money. And you didn't even have to send the loan to us. And so again, that's one of those things where if you look at a high level, what you want to do is you want to make sure, if you can, if it makes sense, you want to keep everything in one place and as simplistic as you possibly can. It's by far the easiest thing to do. So, if you have a one-off, that you love to use that doesn't integrate into your system, okay, that makes sense. But if you are one of those people that likes to try 15 different new technologies, you're going to be paying for 15 technologies that none are really going to use. What you want to look for is the integration. You want to look for ease of use, because at the end of the day, it's going to be easiest for you, your team, and everybody else to continue to get more business from a technical standpoint if you've got everything as easy as possible to use.
And look, Jason, I appreciate that, because I know even from a Get Credit Healthy perspective, that's what you pushed. And you pushed, right? Quite a few years ago. Kevin, he's one of the guys that pushed me also, making sure it's integrated, it's ease of use, it's easy to use, it's all in the ecosystem for that reason. So I appreciate that. And from industry leaders such as yourself, that's where we make sure we're continuously under Get Credit Healthy's umbrella solving that problem. So not only solving a problem of creating new home ownership, addressing some of the wealth gap. And that's something I'd love to talk, Kevin, with you a little bit more about, is that's the next biggest topic, right? Is, and it's been the topic for quite a long time, is the wealth gap. And how are you seeing it in the industry, or how is PRMG really looking to make that difference, knowing that there's such a huge wealth gap in the minority communities compared to others?
I definitely can do that, and it really gets into the financial, literacy aspect. Do you mind if I tell our origin story? Do you mind if I tell how we first got started together?
I want to hear it.
Yeah.
It's actually pretty cool. So I lived in Fort Lauderdale for 13 years, and Elizabeth's husband was the goalie on my indoor and outdoor soccer team.
He's the crazy one, yeah.
Yeah, I mean, like if you're taking, soccer balls to the face from like 10 feet away at like 90 miles an hour, you're mad.
That would be crazy. Yeah, for sure.
And then we had a couple daughters.
I attract the crazy. Crazy.
Well, we had a couple daughters, and then Elizabeth and Nick had a daughter, and we both lived in downtown Fort Lauderdale, so we're kind of hanging out, yeah, let's all suffer together. We're now parents with kids. We're not like the couples without kids going down to Miami and having fun and staying out till 4 a.m. So we kind of were commiserating together. But then I moved to California about 4.5 years ago, and Elizabeth called me, and she's like, "Here's what I want to do. By the way, I'm in the industry." I'm like, no shit. Like I didn't know that, And so then we start talking, and I got here, and there is a gentleman that was running our retail channel who had a loyalty with someone local in Southern California that also had a similar company to Elizabeth. And, I found myself, where do I go? And so Elizabeth and I were kind of brainstorming, and I was like, if it was more of an integrated solution in our tech stack, then it could be something that we could push on a national level. It's not just like, I know someone and they're going to help with credit, And so she went out, built this board of directors, built a company, raised money, helped design and develop tech. And then, literally, like I go into like the services tab inside Encompass, and you scroll down, and there's literally like a button you press. It's like a giant button, and it just transports the file over, and the loan officer can just kind of follow it up as their credit get to a target score if the borrower opts in. It was like awesome. You went and built it. I'm like, great. I can now say to the whole company, like, this is our preferred partner. And that you've been on like a dozen or more of our national calls that we hold once a month, you and your team, and you built out the team. You've got a chief revenue officer, you got Dave Kelly there, and you got a whole group. And so it's really been nice on a personal level to see, you as an owner, build a successful platform in our industry. And so, look, we are teaching people how, like, they don't know what the credit score, they don't know what a down payment is. Borrowers don't know all these things that to us is, secondhand because we've been doing it so long. And so that's where, this kind of product and what originators do at the local level, why it really matters with that wealth gap. There is no better way to create generational wealth than to be a homeowner. It's a forced savings plan. In the last 30 years, which includes a real recession, the Great Recession of 2008, appreciation still averages out to be 5%. In some markets, it's more than that. These, you're gonna go rent and pay a landlord 100% interest rate. You save nothing, you make nothing, you build no equity. And if you own a home, you're less likely, to be divorced. You're more likely to graduate high school and then college. You're more likely to vote. There's less crime. There's just all these things that are better and advantageous of being a homeowner. And so, these things that we do on the local level, they do help with the wealth gap. And, you talk about a K recovery that's going on right now. There's the haves and the have-nots. Look at all the policy out there. If you're a renter, sorry, you have a stay of eviction for a few months, but that's about it. If you're a homeowner, you don't have to make a payment for 12 months. No questions asked. What a deal. The government got behind you as the homeowner, and that's where all the money is. And then the white collar jobs, all their companies are getting bailed out. And, people in the service industry who are younger and renters and not homeowners, they're not recovering as fast. And some are suffering real pain. And so getting into a home is a big deal. And that's how you help, bring together the wealth gap for as much as you can.
Kevin, I appreciate that. And I do appreciate both you and Jason are not only industry leaders, but are good friends of mine. And I always like to say I bring friends to the table because you guys are brutally honest, right? So that's the good part, that if I get through my friends, that means we're doing right. So I appreciate what you say. And also, from Get Credit Healthy, what we have done is we're now working with the GSEs, right? We're working with the GSEs. We're working with HUD nonprofit counselors. You know, we looked at the numbers, and within 1 year, over $918 billion of loans were lost last year, denied, right? And so when you look at that amount, and again, there's huge amounts of opportunity for loan officers today, but from an executive perspective and the industry as a whole, we're looking at the wealth gap, and we're saying, what else are we going to be doing? How are we going to start really resolving this problem? And I love what you said, is that, you know, it's the communication with the loan officers. It's really being actively involved in the community, and then having partners, as I believe, as Get Credit Healthy, to provide the necessary bridge to link the groups up together, to provide those resources, the education that consumers need to really be able to qualify for a home. So thanks for sharing. Jason, you have anything to add?
No, I mean, I think we kind of covered everything for sure. I mean, I'm happy to pontificate on anything that you want, but no, I think this was great.
You know,
it's a lot of good insight from Kevin. Appreciate it.
Hey man, I got a lot of respect for what you guys built. I mean, arguably the best tech stack in the business. I mean, it takes time to do that. And
arguably, come on.
Yeah. Well, I mean, certainly in wholesale, for sure.
Yeah, all right, fine. Thank you.
So, you know, I gotta say, that's why Jason does sit on our advisory board, because he does push us to another level in bringing forth some of the key elements that we should be having within Get Credit Healthy and for our partners. You know, Jason, from a technology perspective, I know Chief Lending Officer, we're always looking at the bottom line, right? But you, as you know, the one that oversees, my assumption, and I know we've talked about this, is that you look at the bottom line too. And how does technology really play a role for the bottom line, in your point of view?
So, you know, it's actually twofold. So one, what I build, I don't look at the bottom line. So this is, I'm incredibly unique, and it's what makes us great is I actually don't work off of a budget. If somebody thinks it, we build it. We have a huge, what we call yes mentality. And if you could tell me anything right now, and I will figure out a way to get it built and deployed and out. And, but for what we do care about is making sure that everybody's on a level playing field, really is the best way to put it. And so from that bottom line, what we want to do is make sure that what is more irritating than anything, I think, from our standpoint, from mine for sure, is, you know, sometimes the people with the most money are the ones that end up getting all the spoils, because their competitive advantage is so high, and they're so far above everybody else that it's just not fair. Like in times like this, nobody really cares about things like that. You know, when those things, because again, you open the door and everybody's flooding in, and or if you're gonna spear loans. But when it's not, when yes. You know, I mean, I think
I
love it. The mortgage industry used to be cyclical, right? Like that used to be a very common thing where that used to happen, and anybody who wasn't one of the big boys got completely decimated in the winter. I mean, as soon as Thanksgiving hit, it was game over until March. Mm-hmm. And so it's just like, that's not okay. And really, it's not okay for consumers. It's not okay for the American economy. And so, you know, what we want to do from that bottom line is make sure that we provide the tools, and I feel very firmly and strongly that everybody should have access to those tools to make sure that they can compete with anybody at any time, level that playing field, and then it's the best process, the best salesman, the best family company, the ones that really care about people. Those are the ones that are going to end up winning, and that's the way that it should be, really. And that's the real bottom line at the end of the day.
Jason, I love it. Those that really care about people, right? It goes back to the build relationship, embracing the technology. Kevin, these are some of the words that you said, caring about people. And, you know I bring it back to Get Credit Healthy, but the foundation of Get Credit Healthy, as both of you know, was founded upon that, right? We started as an educational company. I was hands-on, where I actually helped consumers reach that goal, you know, became FICO certified, FCRA, all of those certifications that one could list, we have them, right? Brought on consumer advocate attorneys to make sure that we've created a process that nonprofit counselors can really help those consumers but more importantly, the consumers reaching an ultimate goal. So why do I say that, and why your comments are so important is that, building relationships and embracing the technology, helping close that wealth gap. We believe Get Credit Healthy plays such an important role, and I'm so glad that you guys actually talked about that, because we really focus on the ease of the process. And I really appreciate your time. I know we're coming up short of having this conversation over. So I appreciate you sharing your feedback, sharing, Kevin, the success stories we've had. Jason, thanks so much for bringing in a different spin from a technology perspective, because we always at Get Credit Healthy learn from those that excel, such as yours with 1,000 developers, bringing in the best within GCH, helping build, that home ownership in America, reducing the gap, building those relationships, and hopefully people will understand that the refi boom will stop sooner or later. And even if it doesn't for the next 6 months, 8 months, it doesn't matter. We should, as loan originators or mortgage professionals, be focusing on every single consumer that wants to qualify. It's our responsibility, right? And so I personally always go out saying, yes, we're a technology firm, but at the end of the day, we have the heart to help consumers afford and become qualified as a homeowner. Any last comments that you guys would like to share? Everyone goes silent.
He's jockeying for last word. I'll let him get it. I'll let you get last word. You did just have a $16 billion IPO, so I'll give you last word. I will say that technology is definitely part of the game, and Jason and team have built an incredible platform. And then outside that model, which I think a lot of the Mortgage Collaborative members here are independent mortgage banks with their own retail loan officers. I mean, there are vendors out there who have raised hundreds of millions of dollars that are billions of dollars. But I mean, look, Ellie Mae is worth 11 billion. Blend is worth over $1 billion. Simple Nexus is, going through some changes too. I mean, there's a lot of different companies out there that are spending big bucks, like Jason said, to his point. And we have that optionality at our lenders to pick what we want to pick for the people and the models that we serve. Here at PRMG, we have 3 channels. So it's a real challenge for us. We have to pick different tech stacks for different models, and they all serve different purposes, each of these models in their communities. And but I think what we can all agree on is that the local originator, regardless of channel, that is the best option for the consumer. Being in the community and using these kinds of tools to help someone along, to help them bridge that wealth gap and get into a home, that's what we do that no one else does. And consumer direct, fintech, they can go for the frictionless Uber, Lyft experience all they want, and they're going to get what they're going to get, but they're not going to be able to help every borrower. And it matters to us on this call, helping one borrower at a time, and we still have that mindset. And I think that's where, all of us are unified on this call. And I appreciate Elizabeth for setting this up, and Mortgage Collaborative, and of course, Jason. Good to have share a panel with you.
Yeah, agreed. Thanks, Kevin. I think, and I'm actually going to take a little bit of the different spin on this. And while I appreciate the support on the technology and firms like Kevin's and Elizabeth's and a lot of you on this call, I think that if you really boil it down, the easiest way to set yourself up for long-term success is to always just take that KISS model, which is, keep it simple, stupid. And all you want to make sure that you do is your system integrates with everything that makes it as easy as possible for you to do your job, so that because really at the end of the day, what it is, like to Kevin's point, he's totally right. When you look at the consumer direct and the fintech and the people that are spending the big bucks, like it works for a while, but what really sets people apart is when you care about people and you're a good salesman. It's those two things that really do it. And fortunately and unfortunately, those go hand in hand. They really do. Like, you can be a good salesman for a year. You can't be a good salesman for life if you do not care about your clients, if you don't care about your people. And that really, while I appreciate the Kevin's point on the technology, I throw it back to Kevin. Like, that's why Kevin's successful. right? Is because he cares about his clients, he cares about his people, and the same thing with Elizabeth and Get Credit Healthy. It's the same thing. When you truly are trying to help people, that really at the end of the day is truly what the game changers are.
Listen, guys, I truly appreciate that. And I think that does unify all of us on this call, is that we, at the end of the day, do care about helping people. And whether it's through technology, such as Get Credit Healthy, through your experience, Jason, Kevin, bringing in all these tools for your loan officers, it's having the right tools that can provide that support to the loan officers to get someone into a home. So I want to thank you both and TMC for putting this together. Tom, I believe I'm going to pass it on to you unless there's any questions from other participants.
Well, thank you, Elizabeth, and I want to echo your sentiments. This is a fantastic discussion between yourself, Kevin, and Jason. We really appreciate the different perspectives in talking about not only the integration of the technology, the stack that speaks to the experience that you want your clients to face, but then also, to Jason's point, having the right people in the mix who truly care about the client. It will always ring through. And last thing I'll say before going to questions, Elizabeth, you made the point early in the discussion, as well as Kevin, you want to act like the refi boom's over right now. And it's a common experience for us within the Mortgage Collaborative that typically our most forward-thinking lenders are thinking out 6 months to a year in advance of the current headwinds and preparing themselves for what's coming next within the lending industry and kind of pivoting their organizational structure towards that. So, kudos to you both for being way out in front of the game, with your affiliation with Get Credit Healthy. Let's give it the opportunity for some questions from the attendees today. We've got about 5 minutes left here to dig right into that. Quick reminder, any questions you have, go ahead and pop them into the chat or Q&A function, and I'll put them out on your behalf. One I've got here, and I'll quickly frame it up. We talked about highlighting the ease of use and the necessity of integrations for a seamless technology experience. I guess I'll start with Kevin here. Jason, welcome your perspective as well. Any insights or best practices that you might share with our attendees today directed towards your originators in helping get them up to speed or creating the buy-in to leverage the Get Credit Healthy platform to help support efforts to qualify more potential homeowners and grow that potential pipeline?
Yeah, I think for us, adoption was continue to have calls, continue to have Elizabeth's team on our calls, and highlighting success stories. I mean, every company has the same bell curve. You got early adopters, and we have early adopters that jumped on it a couple of years ago, and they're killing it. And then Elizabeth and team, they kind of gamified it. They made a contest for people to where do you rank versus your peers? How many how many people did you help save? How many deals did you help save? How many accounts did you help set up through Get Credit Healthy, to put them on the path to home ownership, whereas they were fallout and denied without that support. And we send out updates like, here's who's winning this week and here's who's winning this month. I mean, things like that are fun, and that's a modern way of doing things. I will say, one of the things I've always looked at when we, decide which tech team to use or partner to use or vendor or whatever, I look for iteration. I jump on things as the first client if it's that good. It's so good that it moves the needle. Like for me, the appraisal system was easy because all the technology for managing appraisal software was just sitting there and rotting. Same thing on the servicing side. I mean, both those parts of the customer experience, the borrower experience, no one's putting money into it. No one's putting money into it. So for me, when someone came out with something new, it was so disruptive that even if it was unproven because it was new, it was still worth it because the heartache you go through once you get to the other side with a tech team that you believe in, then, you have something that is, quite honestly, first mover. And so when it came to GCH, everyone's got a credit repair guy, I just call so-and-so, they take them to lunch and we'll repair their credit. Okay. That's what it's been like forever. But now I got a boss lady who set up a company and integrated a tech stack and put it inside, our LOS at the push of a button. So, if you're thinking like, you see the Uber, the Lyft, Apple, as Jason talked about, which, is definitely part of the anchor of my retirement that I've been in since 2004. Let's go. I'll just say, you have to have a frictionless experience. It's the old adage of cheaper, better, faster, pick two. No. If Amazon has taught us anything, it's cheaper, better, and faster. You have to do all three, you're out. And so that is where everything has to go. And that's how we're thinking with what we decide to do and with the direction that we decide to go through. And I'll just add one more thing. When I got here 4.5 years ago, our company's a great company, been around, a long time, but the advocate for someone to say tech is so important to where we're going, we didn't really have that. And so the IT team was kind of in charge, and they would just take direction, from what the business leaders wanted. But the IT brain is different. An MIS security system analyst is like, okay, well, we have to make sure we lock down access, and we can't give this person that, and this data has to be protected. Well, where does that measure with what the business need is with bar experience, consumer experience? So then we created a business analyst team, which would kind of be that bridge and talk to the executive leaders and put everything together. And so, Jason knows all this. He's done all this, and in spades. So, I think, we've got a lot of, members here that are listening and may listen to the future recording of this. Maybe you don't have a business analyst team. Maybe you don't have someone that bridges the gap between the IT brain and the business needs. You have to kind of find a way to develop and put resources behind that. So.
Yeah, I mean, I would probably add to that, as we talked about, I would probably say the people I've known Elizabeth for a very long time, even before, Get Credit Healthy. And, Elizabeth likes to say this to me all the time, but like Elizabeth is one of those people which has built the platform, which is why I, wanted to join the board is, Elizabeth hustles. Like she's a hustler. She's a salesperson. But what it really boils down to, and I told her before, I'm like, hey, if this is ever going to actually take off, it's got to be you, because I don't know anybody from a vendor standpoint that cares more about what they're doing and building than Elizabeth. And so you can't, just like you look at any large company or anything that you build, it starts with one person, and then it almost trickles out from that. And so, Get Credit Healthy is actually a very solid platform that, if you ever talk to anybody on the team or you get in there, it's just that, hey, just give me the introduction, and then you can just stand out of the way and we'll take care of everything else. Those are the kind of thing, and again, I'm very much like that at UWM, and that's kind of, what we have and what we do. And I think honestly, it's a real testament to what's been built through GCH.
Jason, I appreciate that. And Kevin, I truly appreciate the words you guys are saying, because it is something. And as I said, I bring my friends to the table because you guys are brutally honest. So everyone that's listening could understand that I'm okay with taking the hits, right? We all understand that technology has to drive something, and it has to be quicker, faster, easier, right, Kevin? Like you mentioned, I mean, we see what's going on in the industry and in the mortgage industry, but we also have to remember what are the problems and who's going to help solve it. And when we position Get Credit Healthy as a tool or a technology tool, we're also positioning ourselves as a problem solver for the industry. An industry that, yes, refis are happening, but what about the purchase? What about the wealth gap? What about those that are good people that want to actually purchase but cannot, right? Due to their financial situations, due to credit situations. So I appreciate Jason calling me a hustler. but
in the nicest way.
That's a nice way. I appreciate it. But
Kevin, what are we going to do to get more apps? Come on, Kevin, we got to get your apps up. What's going on? I'm like,
exactly.
Oh, hey.
It's the truth. Well, because at the end of it, and everyone I think on this call knows, especially those of you that have been working with us, it is the passion. It's the passion that I see on a daily basis, how many clients qualify because of the process, because of the technology, because of the partners. partners like PRMG, right? Because the loan officers that understand the importance of it, use it. And then on the flip side, we have the nonprofit HUD counselors that are on our platform that follow the program to help the consumer, and the success is fantastic, right? So we have the wins, right? Yes, it's a hard push. It's, you know, we're making it easy. Technology is important to do that, but I think it's also, as we all agree, it's the people and the passion behind it all.
And
Perfect way to synopsize it. I love it, Elizabeth. Great closing. On that note, I guess quick shout out I should give to our partners at Chenoa Fund for the swag today to support. Another great partner in supporting first-time home buyer support and resources with the down payment assistance offering. And really just want to thank you, Elizabeth, Kevin, Jason. It's a great discussion today. I love the energy you guys bring to the table, and it rings through with the passion that you have for supporting your client base and making more potential homeowners out there get credit healthy. Shameless plug for you, Elizabeth. But just want to thank you guys again, and I want to thank everybody for joining. It's a fantastic discussion, not lost in how busy everyone is, and just really appreciate the insights today.
yeah,
Great.
for sure. Thank you so
Thank
much
you.
for having this.
Thanks,
Yeah.
guys. Thank you so much. Thank you, everyone. Thank
And
you, TMC.
And I see Chris Gassel's got a question that just DM me on LinkedIn. I'll get with you. So thanks, everyone.